So let's look at what's likely to occur here. At this point, this market's likely to come back up and retest this area was once support that's now become, it's likely to become resistance potentially. So watch as the market starts to work its way back up to that resistance. And we're going to start to now forecast this market. So I've got my proprietary information set up on another screen. There's a very intense analysis model that we have in-house. So look what happened. We just had that retest, and now we're beginning to continue back down. So you'll be seeing the one chart. I'll be doing my work on the combination of charts that I have on the other monitor. But I do have something that I am using that is mechanical, it's objective, and it's consistent. And again, remember, we're not looking for 100% accuracy. We just want to be 80, 90% right. We know we're going to have a positive outcome. So let's see here what the market is looking at doing in the short term. All right, the market's retesting this low. It's bouncing off of that. It looks like the market is poised to be moving higher again to retest. We have a little bit of a battle going on right about here. So it's looking like it wants to go sideways a bit and channel. But suddenly it's building pressure again. This is interesting. So this is a dynamic environment. It's starting to build pressure to the downside. So you're going to see me kind of call the market play by play in a sense, kind of like a sports event. In an environment like this, things can shift just like waves in an ocean. What's important is our ability to see that occurring and call it. Now, these are very small time frames. They're evolving very quickly. 9 seconds. I've got 3 seconds here, 27 seconds on my other time frame with all the on my other monitor with all my other time frames sitting around. All right, so it looks like it's going to be breaking down ultimately. We have a struggle point between this area and that area. All right, but what we do have also is, you see there's a little bit of a diagonal line that I just drew. You saw that pop up. And as price gets closer to that climax, if you will, you'll likely see the market begin to pop lower, okay, or push lower. I'm going to draw a box for you. All right. So this is the current area here that price seems to be pushing towards. Okay, so we'll highlight that as green. So the market's looking like it's reaching into this area here. So we're forecasting in the short term the market needs to come up and test that area. And let me do this for you. Bring that over. I've had this blue area is that channel in which everything is taking place. That's the meat and potatoes. That's where the large part of the fight is occurring. As we get closer to that diagonal line, you'll start to see that struggle begin to resolve. What we're doing is measuring the odds. Okay, so I was going back to my earlier comment. When you look to chase a move, you're trying to trade or invest in some kind of potential move. It's literally, it's like you're hoping to get lucky. So there's that bullish energy being released now. Okay, but look where it goes to. It's going to be interesting because it's going to go to that area, and then it's going to likely stall. what we do is we look for the probabilities. So what I've devised is a way to measure the odds and to forecast the path of price in a way that helps me understand what the market is likely to do, and then what are the odds of it doing so. Because when I work off of an odds-based scenario, then I know statistically over the long term I'm going to meet my objectives. I'm going to be positive. Look, we just hit that diagonal line, and look at how it's stalling right at the diagonal line there. Notice how it just kind of went up there and stopped, paused. Um, it wasn't some green bar that just pushed right through it. It's struggling there, so that's another struggle point. Isn't that interesting? So these are things that I'm drawing arbitrarily based on my analysis, but actually it only seems arbitrary. I actually have a very specific reason for doing so. So you realize that there is more to the market than meets the eye initially. So it looks like we still have room to go higher. So at this point, it's looking to me like we're likely going to test that area where I've drawn the green bordered ellipse just above. So at this point, I think we're going to get a breakout. There it is. And we're going to see the market move and reach that zone. And I'll tell you where it's going for. It's going for, let me highlight this. It's working towards that area there. I'll make that a little thicker for you so it stands out. Okay, so we're working towards that area there. Okay, so look, we've just hit that level here. Notice how it's stalling again. Once it hit that, look at how it's just pausing. But it looks like it's got energy to break right through. So I think we're going to get a breakout here. There's a high probability for a breakout. So there's your reaction against that line. And that's that zone, that area in the market that had a larger base of bears there. At least, what are we doing here? This is really important. We're forecasting literal turning points in the market, the areas of high probability where the market's likely to turn and react against. So we've done that twice now, okay? Doing it again, and the market's still poised to go break through higher, right? So we said we're going to go higher here. So look at how it took a moment to react against that. You can see how it's actually created a little bit of another. So remember that blue box we've had that showed kind of the struggle point. So isn't this interesting? Look at what it's doing here. Same thing. My analysis tells me that's an area, again, another area where there's a cluster of buyers and sellers. And so we're watching dynamically this whole struggle unfold right before us. Look at the struggle point. Look at where I drew that turquoise line. Look at where it's struggling, it's reacting. Again, these are turning points. So here the market is retesting a lower low. Okay, and it's kind of following, look at that, look, it's kind of following the angle of our diagonal line there, that red line. So two things that we're looking for us to engage. Number one, we need to have enough reward for the risk we're willing to take. So that's the first thing. But secondly, more importantly, we need to have a high quality, high probability outcome. We're likely going to see some move back up. We're still looking at a rotation back up. So notice how the market's just fighting. And that's what we do here. Okay? So we had that quick little last gasp for the bears to kind of push the market lower. And it gave us a hint that maybe things are not quite ready to go, but we were still looking for that rotation up. We just got a rotation up. Okay. Okay, so by the way, so just in case I wasn't clear, our overall forecast for the day is that green box down below where I have the arrow right here. Okay. So we're still looking at hitting this area for the day. No. Okay. So that's likely going to be overwhelmed and so it looks like they're going to overcome that. And now we've got what we call a double bottom. You have the market's made a bottom now twice, right? So it's made a rotation to this price point here. Let me show you real quick. So you've made that bottom here once. and now it's rotated back and made that bottom twice, right? So we have a double bottom here. That's what we call that. A double bottom is understood to be a reversal pattern. The fulfillment of a full reversal would have to mean that the market's going to move decisively higher and should cross the high of what we call a swing high here. This previous swing high. So right over here we have a swing high, right? The market swung up and came back down. So if this is going to be a successful double bottom, then the market should move decisively higher than that point there. However, at this point, it looks more likely that it's going to be hovering, struggling, and pushing lower. So we're expecting a failure of this pattern today. But this idea that you have to hold on to a failing position, hoping it's going to turn around and not knowing when it's going to do so, again, is no longer the case in the market. So look how we've rotated back up. So that double bottom is reacting, right? But we expect it to fail to push to new highs, okay? In terms of going beyond that swing high there. I had a question here come up. There's a lot of people that would actually be trading that double bottom because they see that as a pattern, and that they're recognizing. And of course, a lot of people who are active, they will see that double bottom and look at that as a signal to be buying and going long. What's unique about what we're doing is we can look at that and go, that's actually a false signal. We're likely to go lower. And so this would not be a good place to be going long and buying. Now we did highlight that little red box there, if you remember, that's going to be a strong struggle area, right? So you can see that that's happening now. Now we're coming down to hit and make a little triple bottom. So we're going to get probably a little bit of a reaction to that. So we'll let that unfold. And let's come back to the 9-second chart to show you that. Finally got that decisive break. So finally we got that breakthrough. Now the bears are back again and showing their decisiveness. So now you should start to see the market cycle and begin to work itself as it. And by the way, the market won't move in a straight line. Okay, the market rhythms. It's up and down. It's a rhythm. So we're getting a little bit of a retest, and then we should see a continuation now to the downside below the lowest low. For those who saw the double bottom as traditional traders, investors, and thought that was a buying point, they're now going through the pain and misery of seeing the market go against them and are losing. And they've either taken a loss or they're holding it, and it may grow on them, which we're forecasting it's likely to do that, or just hover and struggle. But it's a lot of turmoil internally. So imagine what's going on through the person's mind who bought that double bottom thinking, hey, that's a classic buy signal. I should be buying and getting a nice profit. Our analysis told us that there was going to be a failure of the market to hold and go higher. So remember we said the probability of it moving lower was 85% chance. So that's what just happened. So we predicted that. So again, you're watching us call false bottoms in this case. This was a false bottom that I was able to forecast for you. And how valuable is that to know that you don't have to sit and guess and hope at something, but instead you can know confidently the likelihood of something occurring, and be right the vast majority of the time. By avoiding these false signals that the market gives, when you understand that you have an ability to do that, you now regain control over your financial future, right? You regain control over your ability to work towards some plan confidently that you need, that is important for you, to your life, your lifestyle, your retirement, your family, and have some kind of a reliable range of results. Think of the guy or gal that's in this market looking to go to the upside, and they bought that double bottom, which we forecasted as a false bottom, and it was likely to fail, and we're going to see a lower move. Here it is. They could be paralyzed, wondering, should I sell? Should I wait for it to come back up and then sell? Should I hold on? Could it turn around for me? Is it going to go lower? They're guessing. Okay, and that's most people's experience with the market is they're largely guessing at what's going to happen and hoping it'll work out. That's not a business. That's not a dependable way to build a retirement. By going in on shorter term cycles, you're actually going to increase your overall yield because you're getting in and out rather than holding something that starts. Let's say something starts at 100. Okay, and during the year, it goes up to 120, and then comes down to 98, and then goes up to 105, and goes down to 90, and then it goes up to 110. And throughout the year, it's cycling up and down. And then by the time the year finishes, remember you started at 100, maybe it finishes at 106. Well, but it was up as high as 120, okay, and it was low as 90. Well, if you're going in and out, the cumulative outcome together is often going to result in much more of a return on investment at the end of the year than if you just held it and just got a 6% return over the year, right? You're likely were able to make 10 or 12 or 15 or 18%. And that changes everything. And especially when you have the ability to control your risk and manage it in such a way where you're not really guessing and you can predict with a high degree of accuracy false indications, false opportunities in the market, you're saving yourself a lot of that hole that the market digs for you that has to get filled back up because that's time and energy and resources that is taken up before you can see a net positive return above and beyond your starting point. All right, so if you start with 100, you go down to 90, you gotta come back 10 before you can start seeing anything positive. So that eats away. So if you can avoid 10% corrections that occur regularly in the market, think of what your ultimate ROI would be. So if you just avoided the 50% correction that happened in 2008, imagine where you'd be today. And if you compound that over time, you could end up with double, triple, quadruple what you would have made otherwise by just avoiding the downtimes throughout the year. So any of the massive corrections that we experience, whether the 10% or greater, right? We avoid those throughout the year and throughout the life of our investment pool that's supposed to be growing and compounding for us. Guess what? You avoid the pain, you avoid the misery, you avoid the stress, the frustration, and you're going to come up with results that are going to help you have 2 to 3 times, maybe 4 times the positive outcome that you could have otherwise had. So look what's happening. We have reached our target, right? Our intended goal for the market. We forecasted what was likely to occur before we finished our session today together. So we've been together now for a little over what, let's see, an hour and a half, an hour and 45 minutes. So in less than 2 hours, we're able to forecast the turning points in the market together. We're able to forecast where the ultimate move, where the market was going to be going. So here we are. We're at our target now. I want you to let me squeeze this down, and I want to show you where we are. You got to experience how the market is actually much more predictable than you've been led to believe. There's a lot more control that you have over your financial investments, your retirement accounts, and your trading activity for those of you who are active. And I hope you're inspired and encouraged to know that there are options out there that can give you a much more confident experience in the market so that you're not sitting there hoping and guessing and floundering trying to figure out how you're going to have a successful retirement that's going to sustain your lifestyle. What's important for you to also keep in mind is the effect and impact of inflation. By the way, here's that target there. You see that? So we've met that easily, and we're exceeding it, and that's where it's turning around. Look at how the market's starting to bounce over here. It's a pretty nice significant bounce. Why is that? Again, don't you find it interesting? Think back every time I've drawn a line for you, the reaction points. That's right there. It's reacting right to that line. Okay? You think that's a coincidence? I've done that now repeatedly throughout our session. Just an hour and 45 minutes. I've done that 3, 4 times, whatever it is, a handful of times. So consistency is important. Again, we talk about not being right 100%, but being right 80, 90% of the time. That's a game changer. So the market looks like it's still posturing to go a little bit lower. There's a lot of energy there to digest. I do expect the market to continue even lower from here. But today, I didn't want to put forecasts and projections that are going to cause us to spend 8 hours together. I wanted to make it succinct. I wanted to compact our time and get as much out of it together. In less than 2 hours, you're able to see how we can forecast false bottoms, topping areas, turning points, and a projected overall target that we expect the market on the way. So as it's cycling up and down, we're able to forecast and highlight those areas on the way to our ultimate target, which was reached here in real time for you. So at this point, I don't want to belabor that or anything else. Let me start taking questions. We'll try and keep this under 2 hours for everybody, unless you guys are enjoying this that much and you have a bunch more questions for me. Let's go ahead and take that. Any comments, questions, anything you'd like to give me feedback on, go ahead and open up your little comment box there, top right-hand side corner, and I'll be happy to start taking some of those, some of your feedback. Thank you. Yeah, that's awesome. Um, I appreciate that. A lot of great comments. Thank you. Um, Nailed the point. Price action and time. That was awesome. Thank you. Yes. Um, love the analogies. You're welcome. Um, if you want to share it with others, you're welcome to do that. Thank you. So here's a question. I've been doing these live sessions now for almost 4 years. So I've got quite a group of people that have been watching me do this rather consistently. And by the way, so you think about the fact that why would this guy put himself out there, put his neck out on the line, and say he's going to forecast the market in real time? Because if it doesn't work out the way he says, he's going to have egg on his face. He'd ruin his career. Well, so what would possess a person to do that? Obviously, having gone through almost 4 years publicly and many years before that privately, where I've seen literally thousands and thousands of interactions with a consistent outcome, we're talking 80, 90% accuracy, why wouldn't I be confident? Why wouldn't I come up and show this to you and show you, hey, this isn't just a one-time event. You have that level of control over where your investments can go. You don't have to be a victim to economics that cause the world around you and your investments to plummet 15, 20, 30, 50%. You don't have to partake in a bear market. Isn't it nice to know that you can actually profit from a market that's moving lower? So why am I doing this? This was inspired by somebody I was talking to who feels a little bit helpless and doesn't know what to do for their retirement, and they're working two jobs. Her husband also works, and it's a tough situation, and they're really concerned about what's going to happen. They have a sense that this is they're going to have some kind of a correction that is likely to wipe out their ability to have a nice retirement. So, and they don't have time to make it up. So the reason I've put this event together is because I've realized there's a real massive need for people who have 401ks and pensions who want to be able to self-direct that more confidently. I do want to be able to help the broad market from having their retirement eaten up by a correction. So by providing a forecast that's meaningful and that's accessible to most people, it empowers you and the rest of the world who works hard and wants to keep more of what they've earned and what they've invested and what they've grown so far, not have to experience another correction beyond the one many of them have already experienced that 50% correction just 8 years ago. So they want to avoid that. I will say this. Right now, we are in a bubble. And any professional worth their salt will tell you that we're in a bubble. So the downside risk is much, much greater than the upside risk, so the upside potential. So if you can think about where the broad market's going, if you'd like, let's go to the S&P real fast. In fact, let's go ahead and grab the SPY, which is a proxy. That's the ETF for the S&P. If you're expecting and thinking the market might go up another 5 to 10% from here, fine. Here's the problem. Are you willing to hold that and hope that you make 5 to 10%, but in the meantime, you're risking losing 15 to 30% or more? Today's session, let me be very clear. None of this was meant to be investment advice. I'm not giving you investment advice. I'm not telling you what to buy or sell, but I'm giving you my opinion, what I would do. The downside risk is much greater than the upside potential. Let the correction occur. If the market continues higher, I'm not going to be upset that it went on without me because I know that the overall, notice what happened. Today's a great example actually in Apple. What happened? The market moved up first and then it collapsed and went down and hit our target. So this is an important aspect. When we're focused on moves, we have this lottery mindset, and that's going to be painful. So we're going to experience the pain and the misery of, oh, I missed the move. But if you understand the odds and you're looking at the outcome, the overall outcome, what are the odds of things happening and where they're likely to go, then you're not focused so much on the move, but you're focused on the overall outcome, and you'll be satisfied by practicing patience and allowing the market to do its thing. And then you'll sit back and sit pretty when you look back and go, huh, wow, I just saved myself a 20%, 30%, 15% loss that I would have had to make up before seeing anything more positive in my account, while everyone else is taking that hit, and they have to make that money back up before they can get back to where they were. And and hopefully empower all of you and give you a new, fresh perspective. There's a lot more hope in what seems to be a world that's getting tougher and tougher to navigate through, at least financially, and maintain our lifestyle and quality of life. Those are great comments. I don't have very many questions, apparently. Just a lot of great feedback. Thank you. I can't think of anything else really. We've been together for a couple of hours. I think if you don't have any other questions for me, I thank you for participating and helping me making this event successful and uh, bringing your own social proof as the market was forecasted live in real time right before your eyes, where you could verify the information right on your own computers. I will bid you a wonderful day and a great weekend. And if you have any further comments, please feel free to go to our website, rbjfinancialgroup.com, and there's a contact us page or link there in the menu. And feel free to submit any questions or any further comments or feedback or anything you'd like to get my attention on. Make it attention to me, Roger Corey, and I look forward to connecting with you. Other than that, have a great rest of your week. Thank you, everybody.